Hello, and welcome back to Explain the Charts. Today is April 7th, 2025, and we are looking at AUDUSD. First, let's start with the news. The AUDUSD has tumbled to a 5-year low below 0.6000 amid the ongoing US-China tariffs war. Escalating trade tensions are putting immense pressure on the Australian dollar, especially since China is a major trading partner. We also need to consider the Federal Reserve's stance and potential rate cuts. Now, let's dive into the charts and see how these events are reflected in the price action. Looking at the one-day chart, we can see a clear downtrend forming since late 2024. The pair has consistently made lower highs and lower lows, indicating strong bearish momentum. Zooming into the more recent price action on the one-day chart, we see a significant drop culminating in the most recent candles. This correlates strongly with the news of increasing trade tensions. There may be some support around the 0.6000 psychological level, a break below that could trigger further downside toward the 0.5500 level. Let's switch over to the 1-hour chart to gain more granular insights into the current price movements. On the 1-hour timeframe, the bearish momentum is even more apparent. We can observe a series of strong red candles indicating heavy selling pressure. The most recent price action on the 1-hour chart shows an attempt at consolidation, but overall the downward pressure remains dominant. A short-term bounce might be possible, but the overarching trend suggests that any rallies could be short-lived. Looking at the 15-minute chart shows some attempts of reversals, but the strong bearish trend continues to pull down. With the additional 50% tariffs on China looming after the next day as mentioned in the news, we could expect this bearish trend to continue. In summary, keep a close eye on the 0.6000 level. A decisive break below this level could pave the way for a retest of the 2020 lows around 0.5500. Conversely, if we see a sustained bounce above 0.6100, it might signal a temporary relief rally, but the long-term trend remains bearish given the fundamental pressures. Monitor news regarding trade negotiations and any policy shifts from the RBA or Federal Reserve, as these could significantly impact the pair. I give it a 60% likelihood of breaking below 0.6, a 30% chance of bouncing above 0.61, and a 10% chance of a sideways trend with no clear direction. That's all for today's analysis on Explain the Charts. Thanks for watching.